Guys, I'm going to talk about some master rules from a day trader, and I got these from No BS Trades on Twitter. You guys could go follow him and check him out. But let's go ahead and see what he's sharing. He's talking about some day trading secrets, okay? And I think this is pretty cool. So let's go ahead and take a look at these. Let's see if I can zoom up a little bit. Okay, a little bit. All right. So rule number one is take one day at a time and try not to have a losing day. I mean, that's really awesome. And by the way, I'm going to show you some stuff on the charts after this is over, but that's like, wow, not having a losing day. I mean, obviously you're going to have losing days, but if you can do that every day and make money, that's a good deal. So I love that. Okay. Number two, take only those trades where you can control the risk, finding out if you're right or not with a 6-tick stop loss. Okay, so now ticks are in futures. So we can say that if we're in futures, we're going to talk about ticks. If we're going to be in shares of stocks, maybe you're talking cents. If you're talking forex, you're going to talk pips. Whatever it is, it just basically means a very, very tight stop loss so that you know if you're right or wrong fast. And the way to do that is that's momentum trading. That means you got the momentum on your side. Okay, step number one, you got your momentum on your side, and you're going to take advantage of that momentum. And if you're wrong, you're wrong, and you know fast. Now, with that type of trading, you're going to have a higher losing percentage, so you just got to remember that. But you're going to, if you make money every day, who cares? Just forget about the winning percentage and just know, like, okay, I'm wrong on this trade. I'm wrong on this trade. I'm wrong on this trade. And then when you're finally right, boom, it goes, and it might go 30 points, and you're there. Okay, and so you might lose 10 trying it out, 10, 15, and then boom, when you're right big. Okay. So number three, take only trades where you have 3 good price action reasons. Okay, so you want to build a case. I talk about this a lot. I even talk about it in my book. Build a case. So I'll say, okay, trend, reason number 1. Strong level, reason number 2. Price action pattern, candlestick, reason number 3. Right, so he's talking 3 reasons. And then you could say, okay, trend line, reason number 4. Moving average, reason number 5. I mean, there's a lot of different reasons you can plug in, but at least 3. If the trading master says 3, then, that's probably good advice. Okay, number 4, take profits when the market shows signs of adjusting back the other way. You'll never go broke taking a profit. Now, this is from a master trader. You're never going to go broke taking a profit. So that's pretty good advice. Okay. Next one. So that means just go up. Not next one. I'm going to hit that in just a second. So that means when it's going up, hey, ride it. But as soon as it starts to reverse, get out. Okay, number 5. Enter in the direction of the current trend whenever a continuation pattern is signaled. Now that's really awesome. I love that. You get a trend, you get a pullback, and then it starts going back. There you go. You get in. And that's really the whole concept of my strategy in my book. And I'll link to that. I'll also link to this post here as well. Number 6, be prepared to sit on the sidelines for hours on end until everything becomes clear to you. If you're not sure, no FOMO stuff. Don't take a trade wishing, one of my good friends, Tim, said, don't take a trade wishing that you were out afterwards, right? Just sit on your hands, wait, be responsible, and be patient. And that's not exactly how Tim said it, but he had his maxims. I should go dig those out and find those someday. I know they're in my files. If anybody's interested, let me know. Tim used to do videos for this channel. Okay, number 7. Make your goal each week to make a net of 25 points. And when you have done that, take a rest. Okay, so that's 25 points a week. That's actually not bad because considering he's doing a 6-pip stop, okay, I wonder if he would do that on one trade. What if you did a 6 pip stop, your first trade, you hit your 25? Are you going to take the week off? Maybe. That's pretty cool. I like that. Give yourself a rest. That's pretty good. Have a daily target to make if conditions go your way, and once it's achieved, close the shop. So again, he's saying close up, take early. So if you've got 25, right, and you're doing 5 a day, that's 25 a week. So only get 5 points a day. And I'm going to go to the charts and show you that too. And, you know, since I talk a lot about currency trading, that'd be 5 pips a day. That's not bad. Number 9, only trade from the opening bell when you have at least 1 hour of prep time with the news and the overall chart patterns before the open. It means do your homework, and that's really good. So what if you do an hour of prep and then an hour of trading? That's 2 hours a day, right? You get your 5 pips. You just study. Like, he only traded one thing, you know? He traded the ES, which is S&P 500. That's it. Take your time, okay? Number 10, take some time off each month and review your progress. Look at your weaknesses and your strength, and then go back and concentrate on your strengths. What are you good at? Find it and maximize it. That's the 80-20 principle. Go for it. Number 11, when in doubt, stay out. That's kind of a repeat of sitting on the sidelines. You know, FOMO, don't do it. Only be confident. And then number 12 is only trade what you see and not your opinion. Boy, that's a really good one. I love that. And that means if the chart's showing an uptrend, don't say, oh, it's got to turn around. No, you trade what you see until you're done, right? Until it does turn around. Most of all, never hold or add on to a losing position. And this is a good one too, because those losing positions will wreck your account. They'll destroy you. They'll destroy your life. They'll destroy everything. Do not add to a losing position. And for day traders that are trading this type of style, right? Now, there are some times when you could hold on to trades and build. You know, I do it all the time with my dollar cost average strategy. So, but this is specifically this guy, his strategy. He's a day trader. But if you're going to be day trading and you're going to be going for it, then, you know, follow this, right? And those are his rules, 13 rules, pretty good. Now, he's got a little bit of explaining at the end, and he said, if you make, and I'm going to expound on this in the chat or on a chart, but he says if you can make 25 points in a week, you can consider yourself an A grade trader. You can reach the goal. If you can reach the goal, you're a novice until you reach that goal. Now, 25 point over 30 weeks trading per year is $37,000. Okay, now that's 30 weeks. There's 52 weeks in a year. So 25 points, and that means you only got to work 30 weeks, $37,000. So your limitation rests with the number of contracts. So if you start with 1 contract, you make 37. You do that a while, you go to 2, you automatically double your revenue, right? That's the key. Just double your revenue by increasing size, but don't do it until you prove to yourself. Okay, so some trades are worth more than your basic sample, and you can plan to trade higher numbers on opportunities that have more reasons behind them. If you follow this plan, you'll make money. If you don't, you'll end up a loser. Okay, now, so that's a really big one too, is when you're really confident, you want to go in a little bit more, right? But you got to prove to yourself that you know what you're doing first, because if you're really confident, you go in a little bit more and you lose more, it's going to hurt. So I wanted to now break this down here, and I'm going to make sure I retweet this because this is good, and I'm just going to say good stuff. Good stuff. Okay, now what I want to do now is go and look at the charts. Okay, so this is the euro dollar, and you can see we're in a downtrend, right? So, well, actually, we're in an uptrend, but if we go on day trading, scalping, we're in a downtrend, right? So I like to trade the bigger trends for swings, but if I'm day trading, you got to go with the daily candle. All right, so let's go now. Let's just, if you're going to do a 6 pipper, let's do the, let's do a very tight stop loss. Okay, so right here, you're going to see a couple things. Number one is you've got opportunities if you're looking for shorts, you got opportunities here. And I mean, this is just today. We've had several trade opportunities. Now, there was maybe some false trades that might have worked, some that didn't. Here's one. Maybe you got a break even right here. Okay, and I'm just looking for pops and retests. That's what I'm looking for, pops and retests. So here's one over here. Okay, and so here's one over here. Now, if we're going for 5 pips a day, right? We're studying. Let's do the calculations here and see if this would have actually qualified, right? So right here, we'll draw a line. We'll say, okay, this is our entry. We got the pin and the entry. This is actually pretty amazing, and there's not a lot of volatility on this, but look at this move. Boom, right? What's your stop right here? Remember, he says you got to get a 6 pip stop. So I'm going to now check this and actually see what my stop would be. Okay, so if our entry was right here, and let's run that little. Okay, this is a 6 pip stop right there. What would be the possible target? 20. Right now, that's what this type of trading is all about. You got most of your week's profit right there, but let's say he gets out when he crosses the moving average, 18. And so what would have got him into this trade? Well, number one, the trend is down. Okay, that's number one. Number two, we just had a nice price action candlestick. You know, this is an evening star pattern. You know, number three, the moving average is pointing down, so we want to go down. And then I would say the last one is this on a level, right? Is this on a level, right? So you got a consolidation over here, and there's a possible level, right? Look at that. Boom. Right there is your level. So with that being said, you just do that. You could have your 5 pips, your 20 pips, and then you're done. You're literally done for the day. Okay. Now, let's just do a little bit of calculations here. If you can you don't have to get rich quick, but you just have to get consistent. And my podcast that I'm going to talk about tomorrow is all about consistency. But let's take a look at this. You do 25 pips, okay, a week. Well, 25 pips is $10 a pip. So what is that if you're doing standard lots? 25 times 10, okay, 25 times 10, 25 times 10 equals $250. That's $250 a week. Okay, now we'll times that by 52 weeks. Okay, that's $13,000. That's not bad, right? $13,000 isn't bad. But yeah, you know what? That's still not amazing. But see, it's all about consistency, because now you do that 25 and you do 10 lots at a time. You're going to go 25 times 100, okay, equals, or no, I just did it wrong. 25 times 100 equals 2,500 times 52. Okay, now we're at 130,000. Now we're talking somewhere, okay? And so, but you can't get there without building up your track record, without building up your muscles. It's like exercise. You got to work out. You got to first do it and make 250 a week. Then do it and make 250 a week, and just keep doing that. You know, when you do it 5 weeks in a row, say, hey, I've arrived. And then you bump it up and you just slowly increase and you build up those muscles. Okay, so that's it for this. I hope these tips were helpful. Let me know in the comments if you want to see me do some more day trading in here. And maybe we could do some live day trading or give you some examples. Remember, I still have my plan. I didn't actually put day trading in it, but I'm going to continue to reevaluate my yearly stats and all of that good stuff. But hey, thanks for watching, and we'll see you in the next video.